Hi, this is Lara at Elliott Wave Stock Market with your daily analysis for Thursday 27th of March. I'm recording the video just gone 5:25 PM Eastern Standard Time. The main wave count yesterday was expecting downwards movement. Movement below 1849.69 invalidated the alternate and has provided me with some confidence in this main wave count, which expects we're in a downward trend to last probably 2 or 3 weeks. The short to mid-term target is 1820. When markets open tomorrow, I'm expecting a very small little upward correction to complete. That short-term target is 1859. It should be over during tomorrow's session. The downward trend overall should resume. At this stage, I expect that the trend is down for the S&P. Let's have a look at the charts. The main wave count at the daily chart level is very bullish. It differs from the bearish wave count at the monthly chart level, and to see the difference between the two, look at the historic analysis on the website. This wave count expects that we're in an intermediate degree second wave correction, which is unfolding as an expanded flat, which subdivides 3, 3, and we need a complete 5 down. This double blue trend line is really important. Every day in the text article there are clear instructions on exactly how to draw it on weekly and daily charts. These trend lines are long-held lines of support and should continue to be so. Within intermediate wave 2, minor wave A found support at the upper of the double trend line. Minor wave C should find support and end at the lower of the double trend line. If we saw this lower trend line clearly and strongly breached, that would be enormously significant. At that stage, a variation of my bearish wave count would be used. But we're certainly not there yet. This trend line has been held for years. At this stage, within minor C, I expect we don't have the first wave at pink or minute degree complete, and within it we have 1, 2, and we're moving towards the middle of a third wave. This small aqua trend line is providing a little bit of support, and if this little aqua trend line is breached with downwards movement tomorrow, I will have more confidence in a trend change up here at minor degree. I expect minor wave C to probably last about 3 weeks. I don't have a target for it because were it to reach 1.618, the length of minor A, that would see it end below this lower aqua trend line, and I expect that's not going to happen if this wave count's correct. When we have minute waves 3 and 4 within minor C complete, I'll use the ratios within 1, 3 and 5 of it to calculate a target for you. I can't do that yet. Let's have a look at how this is starting from its beginning here on the hourly chart. This point here, we have a 5 double zigzag for a 3 and another 5 complete now down here. We have an incomplete zigzag up here. We had a triangle unfolding on the 5-minute chart for much of Thursday's session. I expect that's now complete. At 1859, microwave C would reach equality in length with microwave A. So I'm expecting tomorrow's session to begin with a little bit of upwards movement toward this target, and I expect that should end during tomorrow's session, and the downward trend tomorrow should resume. So not tomorrow, but the next trading day should see an increase in downward momentum as we get towards the middle of a third wave. At 1820, minuet wave 3 would reach 1.618, the length of minuet wave 1. That's the short to mid-term target, which should be met next week. Tomorrow when markets open, sub-minuet wave 2 may not move beyond the start of 1 above 1875.92. This is a very bearish wave count at the daily chart level. It does not diverge from the bullish wave count at this stage, and it won't for several months yet. It still expects the same movement down. It's got the same aqua trend lines, it's got the same structure on the hourly chart. It differs at the monthly chart level. That's all for me today with your S&P analysis, and I hope that all our members are having a fabulous day.